Good morning, everybody. It's Wednesday, September 18th, 5:27 a.m. Central Time. Grain markets are higher this morning. December corn futures up 1 3/4 at 414 1/4. November soybeans up 12 3/4 at 1018 3/4. December Chicago wheat up 2 1/4 at 578. December Kansas City wheat up 2.5 at 582 1/2. December spring wheat up quarter at 621 1/4. Let's start off with this cash for farmers program potentially.
It sure looks like it. Some U.S. lawmakers are considering a farm income support package. Republican Senator Jerry Moran of Kansas spoke about a possible year end aid package that would assist producers being impacted by low commodity prices. Any such aid would likely be part of a probable farm bill extension. The package wouldn't modify any current commodity programs, as an increase in the reference prices would not be timely. Moran said the goal is to find a method by which assistance is provided currently, quickly, and that's probably not by tinkering with Title I of the current Farm Bill. The Republican senator has been critical of Senate Ag Chairwoman Debbie Stabenow's handling of the Farm Bill this year.
This is just talk. It's talk. There's no details here, nothing in terms of the amount of money or the stipulations. But it kind of seems to me like perhaps the stars are aligning for this sort of thing. We've seen it before. You've got the Biden administration next Friday is going to hike tariffs on a whole bunch of stuff from China. And if Trump is elected in November, you may see trade tensions get even worse. And we did see MFP payments the last time we had a U.S.-China trade war. We're far enough below the cost of production for corn and soybean growers here in the U.S. and other crops as well, that I think the government is going to consider this a little bit more closely. I wouldn't bank on this. I wouldn't base any of your grain marketing decisions around this. It would be great if we got it. I know people in the comments are going to talk about, oh, this is socialism and stuff like that. Whatever, guys. It's happened before. It's going to happen again. This is how it works. We subsidize our food in the United States, and of all the things we subsidize, that's probably the best one. There's a lot of things we subsidize that maybe we shouldn't. Subsidizing food is probably a good idea. So I don't know. They're talking about it. We'll keep on following this story.
Russia's profits from stolen Ukrainian grain are funding the war. Since Russia's invasion of Ukraine back in 2022, Russia and its partners have sold about $1 billion worth of stolen grain on the black market. Russian forces either seize Ukrainian crops or force farmers to sell their crops below market price. An estimated 4 million tons of stolen grain and produce have been shipped from occupied Ukraine to international markets. The majority of international buyers refuse to take delivery of grain from Ukraine's occupied regions to avoid sanctions from Kiev. However, Russian allies like Syria and Iran refuse to comply with the sanctions and continue to accept shipments of stolen grain.
This is the least shocking article that I've seen. I think everybody is kind of aware-ish that this is probably going on. This was a well-written article in the Journal. It's a lengthy article. Essentially, what they're saying here is that, Russia is selling wheat to some of its allies at these low prices in order to keep them loyal to Russia and also to help kind of fund the war machine. One of the problems that we've had with the wheat market here in the United States is that we're having export troubles. And a lot of that ties back to the fact that Russia continues to offer the cheapest wheat on the export market. They're just pricing well below what we can price or where we have been priced. And therefore, our export sales have suffered. So is that the result of Russia being able to steal grain from Ukraine? Yeah, it's probably part of it for sure. I don't think this is shocking to anybody, but interesting stuff.
So if you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Chris Barron was on yesterday. We got kind of into the nuts and bolts of 2025 corn and soybean budgets. Doesn't look great. Costs in some areas are going to be down a little bit, but not nearly as much as we would like to be. We talked about different ways that farmers are approaching this, different ways that costs can be cut, that sort of thing. Really great, like hardcore grain marketing, budgeting information is what I would call it. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You get our morning email every single business day. It's a grain market newsletter. Goes out every day at 5 a.m. Central Time. It includes all the headlines we talk about, all of our graphics, charts, all of my cash grain marketing recommendations, all of our premium videos. Give that deal a shot today, guys.
Drought is impacting the wheat crops in Ukraine and Russia. Extremely dry conditions are preventing planting across the two countries. Wheat prices have seen a boost in recent weeks, partially due to Black Sea supply concerns. The USDA is estimating global wheat stockpiles will fall to a 9-year low this season. The Black Sea region is expected to receive rainfall this week. However, large amounts of precipitation are needed to improve soil moisture. Ukraine and Russia combined account for more than a quarter of global wheat exports.
Yeah, the exact number that USDA is projecting is 29% of global wheat exports between those two countries. If you guys are watching, this is a good map from our friends at World Weather, and subsoil moisture, topsoil moisture, whichever map you look at, they're dry everywhere. And that circle that I've got drawn there is roughly where a lot of your winter wheat is grown. So it's early. They're planting. There's plenty of time for improvement, but I think the market is a little bit concerned about this, certainly.
Brazil's soybean crop is slated to increase substantially this season. According to CONAB, which is Brazil's version of the USDA, the crop is estimated at 166.3 million metric tons, up almost 13% from last season. The increase is based on a rise in planted soybean acres and better yields. Despite prices falling to lows not seen in 4 years, soybeans continue to be profitable. A rise in global soybean crush and biofuel production is expected to lead to increased exports and an uptick in Brazilian crushing. CONAB also pegged this season's Brazilian corn crop at 119.8 million metric tons, a 3.6% increase from last season.
So CONAB is talking big crops, but this is the equivalent of USDA projecting corn and soybean yields in April or May. It's just a projection. It hinges largely on weather, of course. The CONAB number is slightly below the USDA number. USDA's got the crop at 169, CONAB at 166.3. You're just splitting hairs there. The estimates may never converge. They didn't converge for old crop, and I don't know if they ever will. The forecast is looking a little bit more convincing to me. Convincing as in the rains are going to come back here like first, second, third week of October. You're starting to see it even in the 16-day GFS out through October 4th. And then you look at the super extended Euro EPS, and it's indicating a very wet pattern. And none of this has really changed a whole lot the last couple of days. So soybean market's acting well, especially just here this morning, but it looks like these rains are coming back.
Salt water is slowly making its way up the Mississippi River due to low water levels. A sill is being built across the river about 30 miles south of New Orleans to keep salt water from contaminating Louisiana's drinking water. Sills were also built on the river in the last 2 years due to low water levels. If the Ohio Valley doesn't receive rainfall in the near term, the salt water could make its way up the river into water intake treatment facilities. At that point, barges may be used to transport fresh water downstream, or a boil alert will be issued. President Biden provided Louisiana with federal disaster assistance back in 2023 when the salt water threatened to contaminate New Orleans' drinking water.
Low water levels on the river have absolutely impacted basis at the very least in some areas, and could impact flat price also if they impact export activity. You wouldn't know it by looking at the soybean board, though. At least, I mean, it's acted much better. As I mentioned, there is some rain on the radar this morning, and over the next 7 days, you may see some rain in these upper river valley areas. The government says, however, it's not going to be enough for an improvement. As a matter of fact, the projection is that by the end of the month, we're going to be 9 feet below normal. The record for reference is 12 feet below normal last year, and 9 is pretty extreme. That would be in like the top 5 of low water levels on record historically. So this is not good news for anybody or anything.
The Federal Reserve is expected to cut rates for the first time since the COVID-19 pandemic today. It's uncertain if policymakers will reduce rates by a quarter point or if they'll go as far as a half point cut. A slowdown in the labor market has caused some to speculate that rates will be reduced by half a percentage point. The Fed runs the risk of reigniting inflation pressures if they cut too much, but too small of a cut could push the economy into a recession. The Fed will release its rate decision this afternoon at 1 o'clock Central Time.
The Treasury markets slightly favor a half point cut. If you guys are premium subs, I had a typo in the email this morning. It's a 63% chance of a half point cut today, 37% chance of a quarter. It could go either way very easily. A couple cool things about rate cuts. This is from Daily Chartbook. The current cycle has marked the longest the Fed has held its rates at peak before cutting. So in past instances where they've hiked rates, this is the longest at which we've held at the peak rate. before cutting. And then I had something about the stock market also. This is Ryan Dietrich. The Fed has cut rates with stocks, the stock market, near all-time highs 20 times. The S&P 500 was higher a year later 20 times. The S&P 500 is near all-time highs now, and the Fed is cutting tomorrow, or which is today. So there's a lot of interesting stuff here. Is this a grain market impact type item? I don't believe so. I'd love to see your operating costs go down, but this might not be enough for the operating lines that are being set up for next year. What did cattle do yesterday?
Cattle futures had a fantastic day yesterday. Live cattle were up 50 cents to $1.57 higher. Feeders were up $1.22 to $2.72 higher. Box beef continued its downward slide yesterday. Choice end of the day at 304.57. That was down 34 cents. And select end of the day at 292.14. That was down 203.
Outside markets, U.S. dollars off a little bit. Stocks are fractionally higher. Bonds off a little bit. Precious metals are quiet. Crude oil is down 89 cents in the November WTI, 69.07 last trade. Have a great day, guys. We'll talk to you on Thursday.